What is up, y'all? Welcome back to another episode of Benzinga Live. Welcome to everyone joining us from live trading, and I'm excited about today's show because I'm going to be joined by an old friend, not really an old friend, but someone that I haven't had on the show in a few weeks, and it's been too long. I've got my man Ryan Pannell from Kaiju hanging out backstage. We're going to be talking about some AI, debunking some myths, and really kind of figuring out where this story is going, because again, I mean, the past year or so, AI has been the dominant story in the market. If you're trading at all, you have to be following what's going on with AI, and you have to not only be following what's going on with the news flow, but really understand what AI is, how it impacts trading, how it will continue to impact trading. And there's no one better to talk to about that than Ryan Pannell. So without further ado, let's go ahead and get this show started. When I come back, we'll be speaking to Mr. Pannell from Kaiju.
You are watching Benzinga Live.
Welcome back to another episode.
I think Tesla could be vulnerable to that.
Layoffs happened today on Google, and the market's on.
In terms of breaking.
Amazon, Salesforce, Apple.
Bam! Love that new intro. As always, if you guys got any feedback, feel free to drop it in the chat. We always like to incorporate our viewer feedback. But all right, guys, without further ado, let's go ahead and bring my man Ryan on the stream. Ryan, how we doing today?
Good. Thanks for having me back, Aaron. I like the new intro. I saw myself in there, actually.
There's there you go. Little cameo.
Little cameo. I was like, wait a minute, who the hell's that guy?
Yeah, well, it's good to have it's good to have a handsome face like yours, balance mine out on the intro, so it helps out.
It's the camera setup, man. It's the camera setup.
Well, before we get into it, for maybe some of our viewers who did not tune in, which they screwed up if they did not tune into our educational series, do you mind just giving, a brief introduction for A, yourself, and then B, Kaiju?
Sure, no problem. I'm the CEO and global chair of Kaiju Worldwide, which is an innovation ecosystem of AI companies. We specialize in predictive AI. We've been using that in asset management for over half a decade now. Our team collectively has 30 years of experience in artificial intelligence, specifically on the predictive AI side. And prior to doing this, I was an institutional trader and portfolio manager and fund manager, first for Europe's largest hedge fund, and then funds that I created and managed on my own. So a little bit of the trading and the artificial intelligence side. And my background before all of that was applied cryptography and theoretical physics. So it's all patterns all day long for me.
Yeah, and I mean, that's why it's great to have you on and talk about this stuff, because, a lot of people I've spoken to about AI and about how it's related to the stock market have been either strictly AI experts or financial and trading experts, and you kind of get to blend both and meet in the middle there, which being able to reach across that aisle, especially right now, is just fantastic expertise and knowledge to have on the show, and thank you again for coming on.
Pleasure to be here. I'm not going to miss an opportunity to talk predictive AI.
Boom. Well, let's get into it. I mean, there's so much buzz about AI out there, a lot of myths, a lot of, hot takes and predictions. The first myth I want to talk about is, AI replacing humans. There's been a lot of people that are like, oh, look at this video from Sora. Hollywood has 6 months left. I mean, how close really are we to AI replacing humans? And I mean, I guess talking about the difference between predictive AI and generative AI. Let me walk me through this, Ryan.
In terms of AI replacing humans, yes, some AI will replace some human functions, but I mean, so did computers, so did automobiles, not a lot of blacksmiths, after the automobile came along. So, I mean, displacement technology is displacement technology, and AI is displacement technology. In terms of investment management, predictive AI, the type that we use, yeah, it'll replace essentially every systematic or quantitative trader on the planet because it's capable of ingesting the entire stock market at the tick level simultaneously, performing billions of calculations on a nanosecond frame, and being active across a diverse universe simultaneously. Show me the person that could do that. I can't do that. You're not going to do that. In terms of pattern recognition, absolutely. On the other side, there is no chance that you are going to be able to type into some system, predictive or generative, and say, build me a portfolio that's going to perform well for the next year and give me at least 10%. I mean, you'll
Right.
get some output, but there's no way you're going to get something that will perform. It's not a crystal ball, and what we've seen certainly is that predictive AI is most accurate in the extreme short term. So, you can't really answer the whole question with yes, humans are getting replaced. They're not, obviously. In terms of the generative side, yeah, you can create cool little 60-second videos with Sora, but are you going to get a Quentin Tarantino film out of that thing? Probably not. You're going to get some really weird stuff initially as the bugs get worked out, but humans like to consume art from other humans, man. I mean, do you really want to read a book that was written by a machine? Part of the enjoyment is, getting inside the person's head. So I think that's where we're at with it right now, realistically, in the market.
Got it. So is one of these two types of AIs, predictive versus generative, is one more superior to the other? And I guess when we're talking about trading specifically, what role does AI, if it's about being more accurate, the way you put it? I mean, like you said, I can't look at every single stock and know where it's trading at right this second, but an advanced AI model might be able to. So do you mind just speaking, I guess, a little bit about the difference of generative AI versus predictive and how it relates to trading?
Sure. So generative AI, probably most of your viewers already know this, but generative AI creates something new, right? I'm going to task it with writing me an essay, creating a thank you note. It's going to go out on the internet and consume information and compile a report for me on a specific subject. It's creating something from a potentially limitless pool of data. Predictive AI isn't creating anything new. It's trying to predict an outcome based on everything that it has analyzed that has come before. So the more you feed it in terms of what's come before, the more accurate it can be with what might come next. So they're really apples to oranges. Generative AI usually has an interface that's language based, so you can talk to it. Predictive AI, forget it. It doesn't speak English, it doesn't speak French, it doesn't speak Mandarin. It speaks code. So you're giving it a specific task: fly this plane, drive this car, trade these strategies, etc. And it is going to follow the rules that it has been given, and layer that in with its autonomous, self-directed capabilities. Right? I mean, all of these systems are capable of machine learning. That's what makes them AI rather than just quantitative. So as it's consuming information, as it's comparing it to what it's seen before, as it's making decisions and analyzing the outcome of those decisions, it's adjusting parts of its own code. So in
Got it.
terms of trading, I think generative AI, if people, any of your viewers who played around this, or, early sentiment on the internet, it's not a very good portfolio manager. It's a terrible mathematician. Predictive AI is good in that realm, but again, only for systematic, quantitative, pattern-based trading. It's not going to do global macro very well at all.
So with the predictive AI, you're able to kind of give it these guidelines and code it in a way to where it's interpreting this data versus it having a mind of its own if it were generative AI and doing all this stuff outside the guardrails. Is that, kind of an accurate way to look at it?
Well, yes and no. I mean,
Okay.
generative AI is trying to um, succeed in giving you what you asked for. And this is where you'll get hallucinations with generative AI. If
Right,
it's not
right.
sure what you asked for, or it can't, with a high degree of certainty, come up with an answer, it's going to guess, because part of its programming, like all AI, is reinforcement learning. It's rewarded and punished for being right or wrong. So it's going to try and be right even if it's not sure. On the predictive AI side, you don't have any hallucinations because the data are known, validated, price, time, and quantity, for example, in stocks, or collected at source, your road conditions for your autonomous car, air conditions for your autopilot in your plane. And so it's just trying to determine what might happen next. It's not creating anything new. It's not trying to give you an answer at the that's right at the expense of doing something outside of its guardrails. So it's not like generative AI doesn't have guardrails. It's that they're looser necessarily in order to allow it the most freedom to create. And then you get six-fingered people and two necks and weird things like that because it doesn't know what those things are.
Yeah, that makes a lot of sense. So kind of in line with this, I mean, you're talking about different AI models producing these hallucinations. We've heard so much about fake news in the past 8+ years, and now with AI, people are afraid that we're only going to be misled even more. I mean, there was it was probably about a year ago, and that fake video of the Pentagon, an explosion at the Pentagon, actually moved the overall market. Do you think this is overblown that we're going to be seeing fake news and stuff coming from AI? And is there a point where it may have impacted AI's overall adoption in financial services?
I don't think the impact's being overstated on the generative side. I mean, the
Okay.
technology is capable of moving so fast. It's already moved vastly faster than our legislative bodies are capable of moving, the ones that move at all. And regulators, I mean, you look at the 40 Act, which governs, publicly traded funds. I'm still required to keep backups on microfiche according to those regulations. I mean, we'll have an SEC interview and say something like, I assume you're okay with encrypted cloud backup, and you're not going to give me a deficiency note here for not keeping my backup on microfiche. I mean, that's where we are
Wow.
today already with that. So you add this component to it where there's no law in place that prevents somebody from creating a likeness of you and then using that likeness to do something that you didn't agree to. This wasn't possible before, so nobody made a law to stop it. And boom, suddenly overnight, you've got, like you said, these market moving fake news. You've got robocalls using AI generated voices that are having an impact in elections. You've got, I mean, even what was only a year ago where there were those DALI images generated of Trump getting arrested and wrestling
Yeah.
with the police, and you had people saying, "I can't believe this is happening. Did anyone see about this?"
I thought
And
it was real the first time I saw those.
I mean, the quality is pretty scary,
Right.
right? What
Yeah.
it's able to generate. So, we've always sort of built up this, well, I read this, but who knows if that's true? I heard it hearsay. I believe what I can see with my own eyes. Okay, but what if what you're seeing with your own eyes is no longer real? It's a real issue for us. I mean, we already don't trust trusted news sources, and this will just add a lack of trust to independent news sources on top of that. So it needs regulation. It needs it really, really fast. And frankly, in the short term, heavy-handed regulation in this area should supersede, throttling creativity. That's what it is. Well, if you overregulate it, we won't move as fast forward. We're moving fast enough. Like, it's more important to throttle it and then step back, see what the downside is.
Yeah, that's interesting. I mean, coming from, anytime you have someone in the business like yourself pleading essentially for more regulation, which we've also seen Sam Altman of OpenAI and Alexander Karp of Palantir do. I mean, that's like the telling sign because usually people in the business are saying, no, we need less regulation, more business friendly. But when you have people in the business saying, no, more regulation, then that's, telling to me again. Are there any lessons? I mean, another recent industry that we saw kind of boom faster than the government could regulate it was crypto. Are there any lessons you think the government can learn from crypto regulation that they could apply? I know it wouldn't be the exact same to AI, but just some sort of lessons there to be learned.
Actually, yeah. And I think that is in an unusual area. So the lesson that the government can learn from crypto is to, make room for greater transparency. Like, most people don't realize that for example, in creating AI directed trading strategies, we're not even allowed to share those models with the consumer. We get asked all the time, can we see these models? Can we verify them for ourselves? But the regulators like FINRA and the SEC treat these models the same as quantitative backtests, which are not allowed to be disseminated. And
I didn't know
so
that.
every time we turn around and say, yeah, I'd love to, because obviously it's good for us, right? If the consumer has greater confidence in the technology, the adoption is quicker, helps our business, it helps the industry at large. So I would love to share this. And yet we're prevented from sharing. No, no, no. Those can be misleading. It's not the same thing. But just like my earlier example of regulations requiring me to back up my stuff on microfiche, there are no regulations that are specifically dealing with AI. And so when they see, transparency with crypto, what was the downside of that? Well, the anonymizing component of crypto was appealing. This is the opposite. It's like, I don't need this for trade secrets. Good luck building this stuff. We spent years doing it. I want to share it so that you look at it and go, oh, yeah, that's well built. I have greater confidence. I'd like to try that out. And instead, they're like, no, maybe with a waiver, you can show it to institutions who totally don't need it in the first place because they have an entire risk management department capable of doing that analysis themselves. So, yeah, I've been saying it till I'm blue in the face. It's like, please just let us do the transparent thing.
Yeah, I mean, transparency to me, more transparency is always a good thing, no matter what you're talking about, in my opinion. I mean, another myth or thing I see people talking about a lot, Ryan, is I guess when they're trying to predict what potential problems will arise from AI. Is when they're talking about that AI will be able to make some catastrophic decisions, whether that be in the defense space, if a drone's using AI, that it might veer off and go attack some other target or whatever it is, or hit the nuclear launch codes. I mean, do you really think, or do we have risk management factors in place to ensure AI doesn't make these catastrophic decisions? And I mean, maybe do that one first and then talk about also how it relates to the trading and investing world. Because if you're using AI to manage your portfolio, you don't want to see it, all of a sudden sell everything out of nowhere or make some catastrophic decision in that sense.
Right. So, yeah, I mean, 60 years of science fiction have set us up for this, right? I
They're
mean,
taking over,
AI,
right? The robots are
AI's
taking
been
over.
around. AI's been around forever in popular culture. It's never the good guy, right? It's like the machine that locks the airlock on you. It's like Skynet. I mean,
Right.
whenever we have guardrail conversation, someone's like, well, do we really need to have that there? And some scientist here will always say, do you want Skynet? Because that's how you get Skynet. And it's a joke, but it's true. Like, for AI to do damage, it's not autonomous. It doesn't have feelings. It doesn't feel overworked or underappreciated. So for it to break stuff, you literally have to tell it that it can break stuff. If you tell it that no decision it can make can ever lose more than X, it'll just shut off, right? And it's not going to be like, oh yeah, well, you worked me all weekend retraining these neural nets. I'm going to wipe out your portfolio. Doesn't work that way. And so where you do have, envelope pushing in financial space is in the black box systems. And there aren't any publicly accessible black box systems. So you don't have to worry about that. We talk about black box artificial intelligence at capital markets trading. You're talking about Renaissance Technologies. They've been doing this for 30 years. They net 67% after fees for 30 years on average. They don't share this with anybody. It's closed. It's employee owned. You're never getting in that space. But they run a black box environment, which means they connect systems to capital markets trading, options, different derivatives, stocks. They give it an allocation, and then they tell it, go make money. And this thing looks for a whole host of impossible to explain patterns and makes like intraday, daily trade rebalance decisions constantly, all day, every day that the market is open. And none of the engineers can explain an individual investment decision, positive, negative, in or out. Now, they make all this money, but they also have drawdowns of like 20 to 40% in a week historically. Wow. Like 2008, the
Yikes.
market collapsed. They lost 20%, $2 billion in a week. And then the next week, they lost another $2 billion. And then by the end of the year, they were up 126% because the machine figured it out. But it's not a suitable environment for your average investor. So we use, the rules-based AI, predictive AI, which is like, okay, your job is to corridor price in between 2 points. You'll sell disparate spreads above and below the market. So this thing is looking for stocks that, based on their current behavior, are likely to stay within 2 points, and then it sells the spreads above and below. It's risk defined. It can't sell deltas above or below a certain range. It can't sell this far away from expiration. It can't allocate more than this amount to it, and it must close the trade if any of the following 13 things happen. So that's how you keep people safe. The model's based on that. The tests are based on that. The live performance is based on that. It just does that.
Yeah, I mean, it's incredible just, I guess, what it's capable of right now and where we're headed. And like we're talking about all these things that you've seen in pop culture over years and years and years, kind of almost as if we're a predictive AI model, that we're now like hammered into this in our head to just automatically assume that AI is going to be the bad guy. The other day, Ryan, I thought of you when NVIDIA reported earnings. I was listening to the CEO, Jensen Huang, talk about AI, and he basically said that we've hit a tipping point on computing and generative AI. I mean, what do you think about that comment? Do you agree? And is NVIDIA, like, are they really the leader in AI right now when it comes to being the technology that powers it?
Well, okay, so full disclosure, I was on the NVIDIA Quadro advisory panel for like 5 years. So I'm a little
Okay,
biased when it comes to
I
NVIDIA
didn't.
technology.
didn't
But in terms of that kind of statement, I mean, at the end of the day, is it not self-serving? You're saying we can't keep up with the demand. There's a shortage of rare earth materials. We've hit a tipping point. It's just going to accelerate faster from here. Isn't their stock just going to go up and up and up and up? And that's not market manipulation. That's your professional opinion, et cetera. So any of those things I would take with a grain of salt. Here's the bottom line. When it comes to Sam Altman's request for $7 trillion to build a new global chip ecosystem, we do not have the natural resources on the planet to support that. Even if he got the $7 million and you built it tomorrow, like, this is what's getting lost in that discussion. There's not enough fresh water in the world to manufacture chips at that scale. We do not have enough strontium. We do not have enough selenium. Like, that you have money and factories doesn't mean you can just go do it. So Mother Nature's definitely going to limit this at some point. And I'm not even talking about the energy component. And so, where we're looking in terms of, more bang for the buck is not more chips. It's greater efficiency. I mean, you rewind the clock a year, like, our Amazon Web Services bills could choke an elephant. Like, they were just shocking every month. And now they're like 20% of what they used to be because our process has got more efficient. Like, we looked at it and said, this isn't sustainable. I mean, yeah, you could just keep throwing money at it, or you can use hot and cold storage better. Our workflows can be more streamlined and efficient. How we organize data, how we access data, how we use the data in chunks or bespoke, one-offs, and in different time series, hourly, daily, 5 minutes, 1 minute, tick level. You add a level of consideration to all of that, and you get increased efficiency. So, I mean, I know it's a crazy time. NVIDIA for sure is the leader. Sorry, they just are. Right now, I don't think that's going to change in the near future with respect to the power and capability. It's what they've focused on for a long time. So, yeah, sure.
I mean, you
But
said you said
tipping
you were
point,
on. Sorry, go ahead.
yeah. No, go. Just like I was just going to say, in terms of a tipping point, I mean, I think the tipping point you're seeing is that we're slipping into a dangerous area. And what's the benefit? Like, really, are we at a level of efficiency where generative AI is actually making people obsolete? Like, are you using GPT now like you were 10 months ago when it was brand new and you're like, oh my God, this is so funny. I'm going to write a dinner invitation in Victorian English and like just see what it'll crunch out. Probably not. It does some heavy lifting. It's great at coding, but I think it's still trying to find its use case more broadly than the specific areas in which it unquestionably is enormously valuable.
Yeah, and that's interesting. I mean, I agree. I mean, it's like, but going back to the Sora example and people saying, "Oh, Hollywood has 6 months." It's like, okay, well, probably. I mean, you've seen some like 15-second slow-mo videos of some like dogs playing in the snow, but to your point, like it's not going to make an hour and a half Quentin Tarantino movie. So it doesn't have that human element of like, it can take a prompt and make a short video on it, but it can't, you can't just say, "Hey, make me a feature film about XYZ," and it'll do it. So really the use cases are like, I think people are just excited about the potential use cases and we're not there yet. But with AI, I mean, how quickly it's already developed, it seems like over the past year or so, it seems to be evolving pretty quickly. Ryan, we're coming up on time here. Is there anything you want to leave us with before our next session?
I think I've seen some of the comments go by in the chat. Some of these guys who are referencing war games are definitely my age.
I've seen war games.
And come on, like really? Because so you were forced to.
Oh yeah, actually I was. We watched it in school.
Yeah. Okay. There you go. Good movie. But what would I leave everybody with right now? Well, I can answer a recurring question here that was like, how is it that FINRA, the SEC, don't allow us to show AI models? The answer is that because they consider them comparable to quantitative back tests, and quantitative back tests actually never prove out in real world performance because they're static, right? You sort of, if I'd done this then, when these things happen, this would have been the outcome. I'll do that going forward. But the markets are like an ocean, which you all know, and it's ever changing, but the strategy doesn't. So they come off model and they're sort of within a distribution range, but ultimately the real world performance never mimics the back test. So the regulators say they're misleading. You can't show them. But with AI models, like when we test them, we wipe the machine's memory. So it doesn't know that it's 10 years ago. It thinks it's watching real-time tick data. And it's making decisions in what it sees as real time, which is why when we forward test it, take our DIP ETF, for example, that's been operating for 14 months, 100% on model. Okay, so can we not share those model validations? Can we not share that model? SEC has good guys there. They've got an AI group. FINRA is a little behind. And it's just, they're focused on protecting the consumer. They're like, if you show these models and it sells the consumer and the model breaks, then you've misled them. And you're like, yeah, but what if in the model's 10-year history, it also shows a 20% downturn the consumer can't see in real time performance? You're not helping them because you're going to over allocate to that. So it's a conversation we're having. If you want to email people and say, hey, I would love it if you would let these freaking people share their models with us, the consumer, that would be awesome. Because really, we do what we can, but they see us as self-serving. So
interesting. Yeah.
Yeah.
You guys should all go email
together. Yeah, please. Yeah. Email your representative, email the regulators and ask them to be allowed to see these things that we're trying to show you.
Well, Ryan, this has been a fantastic discussion. I've enjoyed, I mean, you always have great insights, but I mean, after a few months, even catching up, I mean, the AI story is just moving so quickly that it feels like there's so much that's happened in the last 2 months. So it's been great to catch up, learn more about AI and how and debunking some of these myths that you see out there, because I'm sure it's so frustrating for you, Ryan, that now like you've been doing this and working with AI for years and years and years, and now all of a sudden everyone wants to talk about it, and now all of a sudden everyone wants to be an AI expert, and you're like, no, it's not really how that works. But so I'm sure you see a lot of that stuff and you wish you could yell at someone through your phone like, oh, why are you tweeting this? That's not how that works. That's how I would be, at least if I were you.
Yeah, you know what, I was like 8 months ago, and
now you're used to it.
Now I just sob into a scotch, like that's it. Do what we can here on the show, right?
Yes, yes. We're gonna bring this education. That's like the most important thing when it comes to something like this. To you guys and Ryan, again, you're a great resource when it comes not only to AI but also how the AI relates to trading and finance, which is why we're here. We are a stock market and finance news show. So thank you again for hopping on today. I look forward to continuing this conversation. And yeah, I mean, guys, if you want to check out more Kaiju Worldwide, Ryan mentioned the DIP ETF ticker DIP. And with that, I'll let you get to it. I know we were talking off the stream. I know I just got done skiing this weekend. You're getting ready to go skiing soon, right?
I am. Yeah, I'll
Well,
be
snowboarding.
gone on my way to the future-proof retreat. Gonna get a few laps in and hopefully not break myself, because that would sort of suck. Show up to the conference and be just wasted. But pray
There
for
you
me.
go. Well, Ryan, again, thank you so much for joining us today. We'll catch up soon. Till then, take care.
Yeah, you too, Aaron. Take care.
All right, guys, that was Ryan Pannell, again, CEO at Kaiju Worldwide. Always great to talk to Ryan. I mean, again, like this is the biggest story right now. Probably not even just investing in stock market, but just in general. Like the potential for this technology is so large that it really is. Probably again, just the biggest thing going on right now. Having someone like Ryan that's got knowledge and years of experience in the space is always great to talk to. If you guys have any questions for Ryan, drop them in the chat. Next time I bring him on, hopefully we'll address some of those. Nvidia, we talked about Nvidia. Let me check how that's trading today because I haven't watched it. Ooh, down a little bit. Still near $800 a share. I mean, just an absolutely monster report last week. And really, I mean, that day that the Nvidia reported Wednesday afternoon, and then that Thursday, the following day, the Q's finished up like 3%. Like this thing's got legs to move the entire market, and now a bigger market cap than Google. So people are undoubtedly very excited about this. I just worry a little bit not with Nvidia specifically, because it's like, I own this stock and it's one of my favorite stocks of all time. I pulled up my tweet the other day where I was on record in 2021 saying that Nvidia is potentially the most important company in the world. And I was like, I said when I quote tweeted, I said, I'm wrong a lot, but this was a good call from 2021. I worry, like what I'm talking about with Sora, that people might be getting a little ahead of themselves in terms of the applications and use cases, because I still think a lot of those are pretty far down the road. Like the Sora stuff, you see the video and you're like, oh my God, this is amazing. But then you start thinking about it and you're like, how helpful is really this 15-second ultra slow-mo video? And then you see some other of the, even the Sora videos that make these type of hallucinations and have some of these things going on. So again, I that's my one potential worry with some of these names like Nvidia right now in the near term, is that people are going to realize, hey, these use cases that people are buying the stock for and getting excited about are still years down the road. And that's not to say that Nvidia won't continue to grow, won't continue to report great earnings, but just that that's my one potential worry with some of these AI names that have run a lot. But all right, guys, we're going to go ahead and wrap up Benzinga Live for today. We will be back with Powerball today at noon, so make sure to stay tuned for some hot picks, our disaster of the day, a workout tip with my man Luke Jacoby. Till then, yeah, well, hold on one second. Let me check over all the how the market's doing real quick. S&P 500 is, we're leaking down about 5/100% on SPY, so pretty flat. Qs are up about 4/100%, so pretty flat day overall, honestly. Let's check out Dow. Oh, Dow's getting crushed. What is that? Does that mean energy's getting crushed today? Let's see. No, not energy. Financials, maybe. Why is the Dow getting crushed so bad? Someone in the chat help me out. Is Amazon not having a good first day on the Dow? Is that why? Is Amazon dragging it down? All right, guys, we'll be back with Powerball in a few minutes. Till then, stay tuned. This stream will redirect you there. Please smash the like if you have not already.